Hello and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. Thank you so much for joining. If you have questions or topics that you wish to discuss, please chat those over as we'll take those questions or topics sequentially. In the meantime, we will be going over our prepared content, which is how to save $70,000 to a Roth IRA at Ally Bank for 2025. Via Backdoor Roth IRA. The presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So again, if you got questions or topics, please don't hesitate to chat those up, whether they're on this topic or even other off-topic issues, as we really appreciate the chance to go over your questions and topics. As far as today's topic, which again is Backdoor Roth IRA at Ally Bank, how to save $70,000 in 2025, let's dive into that topic. And here's where we're headed. We're going to discuss unlocking $70,000 of tax-free savings with your solo 401k. We want to first lay the foundation with understanding what a solo 401k is, and then how you can make what they call mega backdoor Roth contributions to a solo 401k, which effectively would allow someone to contribute up to $70,000 for 2025, where the funds end up in a Roth IRA, including a Roth IRA at Ally Bank. So the first foundational concept is what a solo 401k is. And a solo 401k is a retirement plan that's available to self-employed individuals. So it's really a 401k that's for an owner-only business, as opposed to a 401k that one might have at their job, right? You might be working in a big Fortune 500 company where there's thousands of employees. The company offers a 401k plan to the employees. Well, a owner-only business, so maybe a one-person business or a two-person business, for example, say it's two spouses that are working in the business, that same type of business can also offer its own 401k where it's just for the owners. And that is referred to as a one-participant plan or a solo 401k. So if you're self-employed with no full-time W-2 employees, you could set up a solo 401k. Now, there are, of course, different types of solo 401k plans that are available. So some are very vanilla, where, for example, you can only make pre-tax contributions, or maybe you can make Roth contributions, but it's not mega backdoor Roth contributions. So if you want to be able to make mega backdoor Roth contributions, you need to open up a solo 401k plan with a provider that allows for voluntary after-tax contributions, and then an in-service distribution of those after-tax solo 401k funds, either to a Roth solo 401k or a Roth IRA. Now, of course, the solo 401k plan that we offer, that's offered by my solo 401k Financial, does allow for mega backdoor Roth contributions. That's one of the top reasons that customers open up accounts with us. So it's going to make sense to work with a provider like my solo 401k Financial that not only offers a plan that supports mega backdoor Roth solo 401k contributions, but also has deep experience, because it is a specific type of transaction that you have to make. For example, when you make a mega backdoor Roth contribution, what you're really doing is making a voluntary after-tax contribution. Number one, that's why you need to have a plan that allows for voluntary after-tax contributions. And then number two, you're transferring the after-tax funds, in this case, out of the plan over to a Roth IRA at Ally Bank. So you want to work with a provider that has experience in helping customers through those required steps, and then also is going to provide the required ongoing compliance support. Because even though when you make that after-tax contribution, it doesn't need to be reported on the personal tax return or the business tax return. It doesn't need to be reported on the W-2, for example, if your business is taxed as an S Corp or a C Corp. So that first step, that after-tax contribution, doesn't need to be reported. But the second step, when you move the funds from the voluntary after-tax account out of the plan to the Roth IRA at Ally Bank, that is reportable on a Form 1099-R. And we handle that as an optional free service for our customers. In other words, no additional charge. So the benefits of a mega backdoor Roth plan is that now you can contribute a much higher amount, right? So for example, the voluntary after-tax solo 401k contribution limit is 100% of your self-employment compensation, dollar for dollar, up to $70,000. That's 10 times how much someone could contribute to a Roth IRA directly. But just like with any type of Roth contribution, you will have that benefit of potentially tax-free growth. In other words, it'll be tax deferred as your money is invested in the Roth IRA. And then when you go to take the money out of the Roth IRA, if you're able to qualify for a qualified Roth distribution, all the subsequent gains will be totally tax-free. So you've got that much higher contribution amount, but that same potential for tax-free growth. So the steps to convert, the steps to make a mega backdoor Roth contribution to a Roth IRA at Ally Bank would be to, of course, first qualify, set up a plan with a provider like us that supports the mega backdoor Roth contributions. And then step one, make the contributions. So you'll need to have a separate account for voluntary after-tax solo 401k funds, which we help our customers open up accounts at the bank or brokerage of choice. You deposit the contributions into the after-tax account, and you may have questions, for example, on the contribution limits, and we're educating our customers every day and understanding those contribution limits. Then step two, transfer the voluntary after-tax funds out of the plan, out of that after-tax solo 401k account, over to a Roth IRA. And that could be a Roth IRA at Ally Bank. And then step three, you provide us the information that's needed so we can prepare the 1099-R. And we have a form at our website customers use 24/7 to provide us that information so their plan could be added to the queue for us to be able to prepare that 1099-R. Now, while there is a deadline to, of course, make the contributions, there is no deadline to convert the money from the after-tax account over to the Roth IRA. Now, of course, many people will want to convert the money right away so that they can start to invest it, start to have that potentially tax-free growth. If you want to make contributions for 2025, all that you need to do is set up a plan by the end of the year, meaning sign up with us, and that'll preserve the ability to make all types of contributions, whether employee, employer, or voluntary after-tax, by your business tax return deadline, including any timely filed extension next year. So the deadline to make contributions for a solo 401k are different than the deadlines to make contributions to a day job plan. For a day job plan, you need to make your employee contributions by the end of the year. But the rules are different for self-employed individuals because a lot of times you don't know how much you made until after the end of the year. And your ability to make contributions is a function of how much you made. So the rules give you more time. So you just need to sign up with us by the end of the year. That'll lock in the ability to make all types of contributions for 2025 by your business tax return deadline, including any timely filed extension next year in 2026. And then that, again, that contribution, at least the after-tax contribution, doesn't need to be reported, but the subsequent transfer out of the plan to a Roth IRA does need to be reported on a 1099-R. So if you set up the plan here in 2025, you preserve the ability to make all types of contributions until your business tax return deadline, including extension next year. So next year, you're making your 2025 contributions, but you're depositing those contributions in 2026. That, of course, necessarily means that you're not going to transfer the funds out of the voluntary after-tax account to the Roth IRA at Ally Bank until 2026. So that'll be reported on a 2026 1099-R issued at the beginning of 2027. And here's a couple of good slides just to paint the picture as far as how the account setup might look. In this slide, we've got one participant who has two holding accounts, right? They have two accounts for their solo 401k. They've got one account for their pre-tax funds. Maybe they're making pre-tax contributions and then making additional voluntary after-tax contributions, or maybe they've rolled over money from, say, a former employer plan or a non-Roth IRA. But in either case, those pre-tax funds will be in that pre-tax account. And then they've got a second after-tax account. That's the account into which they deposit those voluntary after-tax funds before they get moved out of the plan to a Roth IRA, including a Roth IRA at Ally Bank. All right, well, that takes us to the end of the slides that we wanted to share. Thank you so much for checking out today's presentation. We're going to now go to the question that was chatted up. If there are more questions, don't hesitate to chat those over, as we really appreciate the chance to go over your questions. The topics you want to discuss can be on this topic, can be on other topics. If you do find this to be helpful, it would be really appreciated if you would like this video. Helps us to get the word out to other entrepreneurs, other freelancers, other solopreneurs, just like you, or share it with others that might find it to be helpful. We'd really appreciate that. I had a question about the profit sharing percentage for myself and my wife. I have a 403B, and with matching, that has already used up $55,000 of my $70,000 for the year. My wife has no access to any retirement accounts other than this solo 401k. So my LLC has made approximately $150,000 for this year. I was wondering if I'm able, as I can only do $15,000 in profit sharing, but 20% of 115 would be 23,000. Can she have access to 23,000 in profit sharing and then 23,000 in any employee contribution? Great question. So the key is that your wife is working in the business and reporting her own earned self-employment income. So she would not need to have, for example, a separate Schedule C. But of course, between the two of you, you could allocate, working with your tax advisor, however you want. Generally speaking, that could be done. Of course, you want to work with your tax advisor, but if the vast majority of the income is reported on a Schedule C for her, then that could be used to justify contributions to the solo 401k. Now, she would be needed, if she's not already listed as a trustee, the plan documents would need to be updated to have her added as a trustee. She would need to have the earned self-employment income to justify contributions. And then she could make contributions based on her income, her age, etc. And if she's not making contributions to another plan and she has the earned self-employment income to justify it, right, based on her Schedule C, then she can make a full employee contribution, the full employer contribution, and then you could either not make contributions or you might have a lesser Schedule C that justifies what you want to make to the solo 401k, because you're exactly right. All the contributions that are made to the 403b for you, either as an employee or as an employer, together with any of the contributions that you want to make to the solo 401k, the sum of those contributions could not exceed the overall limit. So in this case, you only have another $15,000 of capacity. But if she hasn't made any contributions, and again, she's working in the business, she's got her own earned self-employment income, she's been added to the plan as a trustee, then she could fully fill up her solo 401k, of course, based on the limits, et cetera. But yes, that could work, in short. Great question. All right, well, we appreciate the good participation. We'll give it another moment to see if any more questions come in. Thank you so much for the great participation today. Again, please like this video. Helps us to get the word out to other entrepreneurs. Let's help out the rest of the solopreneur community. Please subscribe. We go live every day. Whatever channel, whatever social platform you're watching on, whether it's YouTube or Instagram or X or LinkedIn, then you'll get the notifications. You can see the content that we're bringing every day. Again, we go live twice a day. You can also jump on, ask your own questions, or see what other folks are asking. We also invite you to our community. It's totally free to join. All are welcome. It's just another great way to learn, to share the knowledge. We've got over 30,000 members. So it's the largest community of solopreneurs, self-directed investors. Again, totally free to join. All are welcome. So you can check out the forums. We've got a library of videos and webinars. So there's tons of great ways to learn and to share the knowledge. All right, well, it looks like that takes us to the end of the session for today. Until next time, everyone, thank you so much.